Well, quantitative easing didn't really accomplish much of anything for the real economy. It hasn't done much for job growth. It hasn't done much for GDP growth. It hasn't really done anything for, the real economy in which all of us live, work, earn money, and so on. But what quantitative easing has accomplished is inflate massive asset bubbles. The asset economy has benefited greatly from quantitative easing. That means we've seen bond prices go up. We've seen stock prices go up. We've seen the dollar generally go down, and we've seen things like gold and silver prosper as well. The problem with that is that the asset economy spillover or transmission to the real economy has been lackluster. So the Fed's basically continually pumping new bubbles in these asset markets while accomplishing very, very little for the real economy that all of us live and work in. And that's a dangerous situation. When you don't get that pass-through, all you're risking is another massive bust in asset classes for little economic benefit. I think that the Fed is very much looking for a way out of the QE trap. I think that it's talking up the economy to some degree, looking for decent growth, decent employment, not fantastic, but again, decent, and generally fundamental improvement now that we've moved past this government shutdown period. So I think that's what the Fed's been talking about in recent statements and speeches. I think that they're therefore relatively sanguine about the economy, and at the point where I believe they're going to start tapering QE sooner rather than later. And I believe that the next step after that is actual interest rate hikes, no matter how much protesting we hear from the Fed that they're not going to do that. Again, I think that we've seen a huge flip-flop among Wall Street observers. Just a few weeks ago, they were saying, oh, tapering is going to start immediately, it's going to happen very quickly, QE is going to go away, blah, blah, blah. And then literally in the span of 45 days, there was a complete and utter flip-flop, a 180-degree turn. Oh, no, they're never going to taper, it's not going to be till March or June of next year. One analyst at Deutsche Bank even went so far as to say, why bother tapering QE at all? It's amazing how sentiment can shift so much just from a few slightly weaker than expected economic reports, which clearly stem from the government shutdown. I think that the economy is going to be doing okay. I think that there's no reason for crisis-level interest rates and crisis-level QE programs when the underlying economy is frankly doing okay. So I think that the big shocker here as we head into 2014 is going to be earlier than expected tapering of QE and earlier than expected increase in interest rates. And that, again, that's going to be the real surprise that's going to catch a lot on Wall Street by surprise. For Money and Markets, this is Mike Larson.